What's going on, you guys? Brandon from Vegas, and today we're going to be talking about FHA loans, the little darlings of real estate loans. I am joined today by my lender, Bill Gaylord, as always. What's going on, Bill? How you doing, brother?
Doing awesome.
And today we have a special guest in the arena.
Oh, yeah.
That's right, our content director, the head of CC Media, the man who makes all this run, Hollywood Rob. You guys were afraid.
Rob right here.
You guys were afraid of LA coming to Vegas. Well, guess what? He's already here, and he runs our podcast studio. So what's up, Rob?
What's up, guys?
Who's that, X?
The reason we have Rob in the studio today is to tell you guys his story about how he went from bankrupt to using the FHA loan to get a house that he still owns for today. So we wanted a personal, private experience for you guys to have that to share. Bill, let's get right into it.
Can I tease them, though?
Tease? Yeah, tease away.
At the end of the episode, we're going to show you how much equity is in my house.
All right, I like that tease.
Since you bought it,
Yeah,
right?
since
We're
I
going to
bought
show you
it.
guys how much equity Rob has generated in 3 years.
3 years.
All right. We're also going to be doing an Amazon gift card giveaway for anybody who's in the live chat. So make sure you guys tune into the live chat weekly, Thursday at 10 a.m. All right. Bill, why, from a lender's perspective, do you think the FHA loan is so valuable?
It is so valuable because it is probably the easiest one to qualify for, number one. It's got an incredibly low down payment, number two.
Yep.
The credit score requirements are very reasonable, number three. It's a great loan for people to get into a home.
Yeah, that's why I call it the little darlings of FHA loan, because they'll just let anybody in there on either side, working or as a customer,
Yes.
right? You might see somebody with one leg and an eye patch. You never know. Because with the FHA loan, the debt to income is so high, up to 50% in a lot of cases,
Yes.
which means half of your money can go to child support, car payment, DoorDash, all the stupid stuff you guys like to buy, waste your money on. Guess what? The FHA loan doesn't care. You're allowed up to 50%. It also allows your guys' garbage credit scores to come through. The FHA loan minimum is 580.
580,
Now,
yep.
me and Bill get in fights about this.
Yeah.
I would never tell you to qualify with a 580. I don't believe in the minimum, but if you need to get into a house, 580 is the credit card minimum, right, Bill?
100%. And we can do it. And a lot of people go, oh gosh, I can't get in because Brandon keeps saying you got to have 640. And I'm like, no, you can go 580. You got to be really good at 580, but 600, over 600 is usually pretty good.
Yeah. The way I
You can
describe
really get at home for 580.
Yeah.
Credit score.
580 is the minimum.
Crazy.
You could actually get under 580, but then they'll most likely require a 10% down payment or something like that to
You just got to
compensate.
pay more.
100%. The FHA loan is like that friend who loaned you $20, but then also hits on your mom, right? Like, it has really good value, but there are some downsides to it. And that's what we're going to cover today. Not just the pros. We're not here to sell you anything. We're here to tell you the pros and the cons so that you guys can make the best financial decision for yourself, right? So, Bill, short and sweet. These people don't know anything about real estate. They're kindergartners. What is the FHA loan?
The FHA loan is essentially Federal Housing Administration through the government. So it's
Federal
a government
means
type
all 50
loan.
states, by the way.
All 50 states. Yep.
Yeah.
It can be in all 50 states. It is really made for, while it's not a first-time home buyer program per se, it is really set up for that.
Why do so many people think the FHA loan is only for first-time home buyers? Why do you think that is?
Because it's easy, because it's an easier loan to get into.
Yeah.
And so, but the interest rates are lower than conventional rates, which is amazing, right?
To give you guys an exact amount, right now the conventional rates are hovering at about 7.05. The FHA rates are sitting about 6.39. That's the difference of about $120 to $150 a month on the same property. So for you guys who are bad with percentages and numbers, I got you.
The only downside that I don't like, Brandon, honestly, is they have what's called an upfront mortgage insurance premium.
Yeah.
And you charge that. They don't come out of pocket for that fee, but it's just to keep the FHA program going so that more buyers can get into the program.
Yeah.
But that, if they refinance out into a conventional mortgage, they'll probably get a refund of some of that.
Well, let's talk about it because a lot of people know about PMI, right? Private personal mortgage insurance. But what they don't realize is the FHA loan has MIP. And to me, this is the single biggest con of the FHA loan, and it's the one that I want to go over the most. So can you tell them the difference between PMI and MIP?
So PMI is on a conventional loan, private mortgage insurance.
Yeah.
FHA, as Brandon said, has MIP, mortgage insurance premium.
Yeah.
Now, there's two types of mortgage insurance premium added to the FHA loan. Number one is upfront mortgage insurance premium. That's 1.75% of the loan amount that's added to the loan. And then you have a monthly mortgage insurance premium, 0.55 for a minimum down payment of 3.5%.
100%. And if you're at home wondering, well, Brandon, why doesn't the government just charge PMI like conventional loans do? The answer is fuck you. That's why. Right?
They got to get their money.
The truth is, you went to a government school where the government made sure to not ever teach you financial education. This is why they offer you things like student loans at 18 years. Like, let me give you a perfect example. At 18 years old, with no experience, no money, no financial history, no credit, the US government is willing to loan you hundreds of thousands of dollars to go to school. You graduate from that school with experience, knowledge, and a government education, and they won't loan you hundreds of thousands of dollars to buy a house because of your student loans, right? Like, is this clicking for you guys? The point is, they're taking advantage of your
You can
lack
also
of
buy beer at 18.
You can also buy beer at 18. They're taking advantage of your lack of financial education here, guys. So what we're trying to do here is, if you're going to take a government loan, you have to understand that mortgage insurance premium is permanent. And if you are not financially literate enough to overtake the mortgage insurance and defeat the FHA loan, you are going to end up paying like $1.2 million for a $500,000 house. Okay? You need to be aware of this when you're taking on the FHA loan, and we have to make sure that you guys are knowledgeable on how to do that, right?
Yeah, and the great thing about FHA is a mortgage insurance premium on a monthly basis is typically lower than it is on a conventional loan.
Correct.
Because it's FICO score
Correct.
driven. It's only 0.55, and it was lowered by 0.3% about 3 or 4 years ago.
Yeah. Was that 0.3 or 0.03?
0.3. So it went from 0.85%
To 0.55.
to 0.55.
Yeah, which is really good in the long
Really
run,
good.
right?
Yeah.
But again, you're still going to be paying over twice what your house cost if you never finance or refinance the FHA loan, right?
Correct.
And so that's what we want to pitch today, right? When you take out an FHA loan, you have a goal, right? Robert, when you sat down with Bill, right, to get your first house, tell him the story. Where were you at? What made you realize that, hey, I need to get into a house and the FHA loan's going to get me there?
Well, I was bankrupt 3 years prior, like zero. I had like $7 in my account. Like, I think I have that snapshot somewhere. And I started my business as a media company. And then, you know, around that time I had met Bill. He was talking about mortgages, real estate. I had zero financial background. I didn't know shit, right? Basically. And, you know, my parents are immigrants. So I was really trying to break the chain of just financial security, right? And so the more I hung out with Bill, the more I picked up on all these numbers and home ownership. And what really clicked was somebody had said, one of the realtors had told me, you're already paying a mortgage. It's just your landlord's mortgage. And literally that like hurt.
It hurts, right?
I'm like, oh my gosh, that's like 100% interest.
Yeah. Yeah.
And then I went in a wormhole of calculating how much money over time I spent on rent in my life.
Yeah.
And I was like, dude, I could have bought so many homes.
Hundreds of thousands of dollars, right?
Hundreds of thousands of dollars of rent. And
Because you were renting in California.
I was living in LA. I was renting a 3-bedroom house with my business partner for $3,600 in 2015.
So that's what, about $43,000, $43,000 a year you were spending?
And in Vegas, that's like a $500,000 home.
Yeah. It's crazy, right?
So we were just throwing money, burning it. And then, you know, I'm 44. So I bought a home at 41. So it's never too late, guys. But really, I started getting educated. And then I think I just asked Bill, like, hey, how do you actually get pre-approved? And I thought it was this whole like background check pre-approval process. It's literally he sits with you and he asks you 3 things. What is your credit? How much do you make? And then do you have a down payment? And then he puts in the numbers. Right now he has like this payment calculator. And then that's it. I found out in like 10 minutes.
Well, the funny thing too is like Rob knew nothing. Rob was Hollywood Rob, right? He's a
Hollywood
videographer
Rob, baby.
looking out here. And so we're doing a lot of content for some other stuff that we're working on. And all of a sudden he starts hearing about the mortgage side. and then FHA loans, conventional loans, bankruptcies, all this kind of stuff. And it just by like you, all your audience watching you, they're learning. And that's how he learned. He basically consumed that information day after day after day when we kept in. And then he was like, can I buy a home?
Well, also, I was super skeptical about putting 3.5% down.
Sure, it seems fake, right?
Yeah. I was like, this sounds crazy. It's like, can you really do this? And this was 2021. So rates were like 3.5. So like I was up against like cash buyers, multiple offers,
Yeah.
like 30 offers. I think we had 13 offers on my home, and I was an FHA loan.
Yeah.
It was
so for
crazy.
a lot of people say, oh, during a seller's market, FHA loans can't get through. Yes, they can.
Yeah.
If you're the
It's
best
the
offer,
agent.
if you're the best offer and your agent knows how to negotiate, you can get FHA loans through, man. It
was like a miracle.
It is. But you were willing to put in the work, right? And that's why FHA loan should really stand for like finally home at last, right?
Oh,
because
I like that.
even if you're someone, a lot of people think, oh, I'm 40, it's too late for me. No, it's not.
Never.
No, it's not.
Do you know
right?
the average first-time home buyer now?
What is it?
38
38.
is the average
38
first-time home buyer.
is the average first-time home
It used
buyer.
to be 33.
Yeah.
It's now 38.
In
Yeah.
Bill's
It's never too
generation, it
late.
was 17.
No, a lot of people think that, but boomers were buying at like what? At least 21, right? At least 21, right?
Bill, when did you get your first house?
How old were you?
Well,
I thought you.
I was 21. And I bought a little,
See what I'm saying?
I bought a little
Yeah.
condo. Yeah.
So
Must be nice.
we've kind of gone over the cons of the FHA loan, the permanent mortgage insurance, right? But the pros to me so vastly outweigh the cons, right? 3.5% down payment on a $400,000 house is $14,000, right? Imagine someone.
That's what I paid.
Yeah, imagine Jeff
That's
Bezos.
exactly what that's my example for my house.
It's $14,000.
Yes.
And you don't have to put the $14,000 all at once. You put a $5,000 EMD or $7,500 EMD, then you put the rest down at the close of contract. So you will have 30 days. You don't have to take your entire bank account and drop it. You put an EMD down and then you pay the rest
So
later.
what's an EMD?
But can we just sit back for 1 second and just look at that number? You get a $300,000 asset that you can live in, okay?
400.
A $400,000 asset you can live in by only paying $15,000.
Which is crazy.
And he taught me that is called leverage. That's how the rich leverage money is.
Yeah.
They put less money down to get this huge home and asset. So that also blew my mind. I'm like, I could get into this home for $15,000, dude. My camera's worth $7,000.
Here's what blows my mind. Are you ready for this? We're going to make a TikTok about this later. If you told someone they could get a $400,000 Bentley with only a $14,000 down payment, everyone would be driving Bentleys.
Sure.
They wouldn't say, oh, it's so hard to save money. No. They would drive a Bentley because in this country, we value cars, which lose money, over houses, which make money, right? If you told people they could get a Bentley for only $14,000, everyone would be having a Bentley. But when you tell them you can get a house for $14,000, they panic, right? $14,000 is a very low amount for a $400,000 asset.
And you guys if you wait till the end of the episode, you'll see how much equity is in that house.
100%.
Which is crazy.
So the down payment is low, $14,000 on a $400,000 house, $10,500 on a $300,000 house. These are payments that people can make. The aforementioned credit score of 580, I think you should hit with a 640, but the minimum is 580. 640 is what I tell you should probably have, right?
That was around mine.
Yeah.
I was probably like 670, 660.
Yeah.
For
and
mine.
you can have the higher debt to income ratio. If you don't know how to find your debt to income ratio, really easy. Go to your last month's bank statements. Okay. Are you ready for this? I'm going to help all of you guys out. Go to last month's bank statements on your banking app. Circle in red every time you spent money on something, and then circle in blue whenever money hits your account. All right. Now, all of those aren't debts, but it'll definitely help you guys get a little bit closer to where you guys need to be, right? Bill, what is considered a debt for the people at home?
A debt is considered a car payment, credit card payment, student loans, personal loans. Those are debt payments. You could also, if they have a child support,
Alimony,
or spousal support, whatever it is, that's also a obligation. Debt
So
obligation.
basically, the lender's going to look at your debts to see if you can afford the payment. That's what they're looking at.
Yeah.
But like if you've belonged to a fitness center, that's not a payment. That's discretionary. It's your choice. You can do it. But anything that you are obligated to pay back is considered a debt.
Do you guys notice how he didn't say hospital bills?
Hospital bills are not.
You notice that, guys? Around in the real estate area, we don't give a shit about your hospital bills. If you're panicking because you're like, oh, I owe $15,000 for this or whatever, guess what, guys? We don't care. Do not panic. Do not let that be a reason that holds you back. Little pro tip here.
He also
right?
said the first thing he said is don't pay your collections. He told me that. I don't know. I don't know why you told me that.
Because if you have a collection from the past, I get this all the time, Brandon. I'm cleaning up my credit before I come to you. And I'm like, no, I need to see it now. Because cleaning up your credit can sabotage your credit. It can torpedo the credit score.
Yeah.
And if they had an old collection that was 2-3 years ago that they just haven't taken care of, and then all of a sudden they take care of it to say, oh, I cleaned my credit up, it becomes a new problem. And that new problem makes the credit score go down. So those collection accounts can be paid off at closing, so it does not hurt your credit.
Yep. That's why I always tell people. If
Oh,
you're
I think we got a
prepping-
question.
Not necessarily questions, but we have people saying that they bought a house at 27, one at 36, and then somebody did ask if medical counts, which we just answered, and then somebody asked, is the conventional loan better for $100 more a month?
For $100 more a month, to me, and this is personal, right? There's no such thing as better or worse in real estate. It's all about your financial situation. If I could get a conventional loan for only $100 extra a month, I personally would probably take it because in the long run, 3 to 4 years down the road, when I'm looking to refinance, it'll be cheaper because I won't have to fully refinance. I already have a conventional loan. That's just my personal thoughts on that.
And I would look at it too from the standpoint of the upfront mortgage insurance premium on FHA. That is a chunk of money that's added to your loan.
Yeah.
And if it's an extra $100 on conventional, it may be worth it to go conventional. Because the MIP, if you're in that FHA loan for the long term, the MIP will not drop off. If you're in a conventional loan and your property goes up in value, like my friend over here, that mortgage insurance premium can drop off.
Yeah. FHA loans, I've done a lot of comparisons to Little Darlings and things. Think of FHA loans like your favorite pair of comfy sweatpants, right? Is it something that you'd wear to a dinner, a nice dinner? Is it something that you would brag to your friends about? No, but it's comfortable. They're easy to slip into, and they keep you warm when you need it, right? With an FHA loan, I'm not saying go out. You're not going to buy $1 million house with this unless you live in Los Angeles, where $1 million house is a crack house, right? But you're not going to get a castle with the FHA loan, but you will stop renting, which is ultimately our goal. You'll stop renting and you'll start building equity. And speaking of equity, Rob, let them know you used an FHA loan on your property 3 years ago, right? How much equity have you gained in your property in the past 3 years?
So I'm going to pull it up so people know it's real.
Yeah. Well,
I'm going to actually have you read it.
Okay.
So this is, I like this number.
So
Set it up.
Rob, what was the cost of your home when you bought it 3 years ago?
$311,000.
So Rob, you bought a home for $311,000 3 years ago. You currently have $45,429 in equity in your house. So
Also, the down payment was $15,000.
Yes.
So I paid $15,000 to get a $311,000 asset that I can live in. That's like going up in value.
yeah, your house. Now, this is what we tell people. So you've gained, let's just call it $45,000. You've had the house for 3 years, which means you've gained about $15,000 in equity per year, right? Do you know what that is? That's 5% equity per year. What do we tell people? The average American home is gaining what? 5% equity per year. Your house is gained 5% equity over a year for the past 3 years, right? Well, guess what? You've gained 15% equity. You put down 3.5% down payment, right? Which means if you wait another year or just come up with 1.5% in cash, you have the 20% to refinance your property into a conventional loan, right? And all you had to do was sit in the house for 3 years. Have you put more money into your house? Have you remodeled your house? A little bit?
Just paint,
paint,
stuff
but
like
not
that.
a full remodel.
Yeah, no remodel.
So essentially, all you did was buy your house and sit inside it for 3 years, and you've already gotten 15% equity.
But the bigger issue there, and he talked about it briefly, was leverage. He basically put $15,000 down, and in 3 years, that $15,000 made $45,000.
well, we talk about it all the time. If you put
He's
50
basically tripled his money. That's not my
our
phone.
phones
That's
are
okay.
killing it.
That's Metro. Hey, Metro PD is calling me. Okay, I can't silence them. All right, they are not allowed to be silenced.
So he's basically using the house as a great asset. Now, if he put that $15,000 in the stock market, right, you couldn't get those types of returns. Or it'd be very difficult.
Well,
It'd be very difficult.
some of the now again, this is not going to be official because you're going to get different numbers from everyone. But the S&P 500 says it can return a value of like 10.5%. Okay, well, if he had put $15,000 in the stock market and got a 10% return, that's $1,500. That's not bad, but you put $15,000 into a house, and so far you have $45,000 in equity.
Yeah, but the great part is you're living in your asset.
There you go.
That's what it is.
There you go.
It's like you're living in it, dude. Like you're living in your savings. You can tap into the equity. You're not paying someone else's.
You can paint the walls
Yeah.
black
Yep.
if you want.
You're losing more money by renting is what the bottom line is
100%.
versus building your like net worth. Like Bill says, I didn't even know what net worth before I bought a house.
Yeah.
And now I'm like, I got net worth. Now I actually have net worth, right?
Yeah.
And banks also look at you better. Like now you have a financial home, and when you borrow money now, banks will look at your credit score differently because you have been paying off this huge loan amount.
Yes, sir.
Yeah.
So were you scared going in?
I was more so just didn't know anything. I was scared during the process. The 30-day, closing time. I was so paranoid that it was just gonna fall apart the whole time. It was like the worst 30 days of my life.
You're waiting for the shoe to drop. Yeah,
I waited for Bill to call me saying, "Hey, you know what? This is not gonna work out. Sorry," but it worked. He talks about just doing numbers, and if you look at it, numbers, and he's very good at breaking down numbers. I went with his team. And they said, this is what you need, Robert. This is what you need to do with your savings. This is what they just kind of told me what to do as far as the game plan. Bill always talks about game plan with numbers. And so you just reverse engineer your mortgage payment, what you need to spend on your groceries. He's good with all that stuff, So if you're not good with numbers like I am, him and his team, you're great with numbers. They can all break it down for you.
100%.
Yeah.
Awesome. We have a question on the live.
Yes, we do. It says, please, I have over, I'm assuming they forgot to add a K, so I'm just going to say K, $135,000 on my home equity, and I bought the house 2021, Richmond, Texas. Can I use the equity to buy another house?
Hey, hold on with that, because that's actually a great question. We're going to finish with that. We're going to talk about what you can do with your equity and how you can refinance. Hold off with that question. That's a really good question, right? What I want to finish with is some myths around the FHA loan, right? Because when people don't know something, nobody likes to have no answers. So we've been doing this since the beginning of time with Greek mythology, Roman mythology. We fill in the gaps of not knowing with myths. Where does lightning come from? Oh, it's an old white man in the sky throwing bolts at the people, right? Like we fill it in with myths. So
me?
Zeus.
yeah, that's you, Zeus,
that
right?
guy? The
You've
old
been
white
around
guy
for that
or
long,
what?
right? So
I
the
like
idea
these
that
analogies.
Yeah, come on. FHA loans are only for first-time home buyers. No. You could have bought 15 houses and still use the FHA loan. The FHA loan's only requirement is that it's your primary residence. You cannot use this as an investment loan, but you can flip it into an investment later.
2 years. You got to live in it for 2 years.
Yes. The second myth
I
is
want to
that-
say one thing though.
Yeah.
I want to clarify this because you can't have two FHA loans in the same area at the same time.
Correct.
So if you have an FHA loan, you want to buy a new property, you can't go FHA. You'd have to go conventional or refinance that FHA into a conventional. Now, if you're 100 miles away, you're going to a different market, no problem. You can have another FHA loan.
100%. Number two, FHA loan homes are all fixer-uppers. In the city of Las Vegas, the FHA loan is currently what, Bill?
It's about right now. It's just under 500,000 and expected to go about 525,000 for 2025.
And remember, that's just the loan.
The loan
So
amount.
if they're loaning you $525,000, what kind of house can you buy?
Around 560.
That means with the FHA loan in Las Vegas, you'll be able to buy houses up to $560,000. That's a house in Summerlin.
That's a nice house.
That's a house in Inspirata. That's a house in Sky Canyon. That's a new build for $560,000.
What does that get you in Cali?
Right? A shack, not even close to the beach, like a cardboard box on the streets with puke next to it. Right? And some needles.
sad.
You know?
I went in and I gave blood this morning, and the person who was taking my blood said, I just moved here from California. She goes, I was living basically couch to couch in California because I couldn't afford the rent.
Yeah.
Here I'm renting. I love it. And I'm going to start to save, and I'm going to look at buying a home next year here in Las Vegas.
Yep.
It is more affordable for sure. So you just put a plan together.
Yeah. Guys, to finish here, FHA loans aren't perfect. They're not perfect, but neither is the person using it. Your credit's not perfect. Your income's not perfect. Your debt's not perfect. You're not where you want to be, but you know that you're tired of renting, right? And the FHA loan is the greatest weapon against terminal renting ever created, right? Even if it gets you a condo, even if it gets you a townhome, anything that generates equity is better than consistently paying your landlord to stay there. I cannot say this enough. If you have a landlord, that means you have a lord. And if you have a lord, that makes you a peasant. You are an unskilled laborer paying a lord to rent their land. That is the literal definition of a peasant. So you may mock, you may scoff, you may say, oh, I want a bigger house. Great. Live in your FHA loan house for 3 years like Rob, gain your equity, and then if you want to turn around and get a bigger house, use that equity, you can. But there's no reason to continue renting. It just doesn't with this much money available to you, it doesn't make sense anymore. It's all excuses.
And Brandon, what I'm seeing right now is a lot of co-signers coming in.
Yeah.
A lot of family members co-signing with others, a lot of friends that are teaming up and buying a home.
Sure.
So that income is a big key right now to overcome some of the interest rates that are a little bit higher.
Yeah.
But they can do it. They can get a roommate after.
If you and your friend from college, or you and your roommate, or you and your brother, or whatever, you and your partner, you guys are renting a 2-bedroom or something like that, why not just combine your incomes and buy a 2-bedroom condo or a 3-bedroom townhome, right? It's the same concept, except for you own the place.
You own the
right?
place.
You can combine your incomes to own something. No one's out here telling you guys that you have to buy houses as single people. Houses were not invented for single people to buy them, right? So your single income doesn't afford it, but partner with somebody else and you can achieve it.
Don't wait till you're 41 like me. If you're in your 20s,
I'm about to say,
start thinking about it now.
Now, is that your advice for the people? Is that your advice for the day?
Dude, like 20s to 30s, start buying a home. You're going to be so happy in 5-10 years. Like you're going to be set, guys. Talk to Brandon, talk to Bill, and like you will be set. I can't stress it enough. Any young person I talk to now, I'm like, you got to buy a home in your 20s.
Yep.
Our friend Austin has that goal.
Yeah.
Oh, we have a nickname for Austin, but I haven't debuted it yet because I'm not sure if we'll be able to get it by on YouTube. But
my
it's
God.
kind of funny. I'll test it. I'll test it on another episode. Bill, you got any final thoughts for the folks?
Get a game plan together. Understand where you are right now and where you need to get to buy a home. So we put a game plan together called a CIA analysis, credit income asset, and we'll put you in the home when you are ready to go.
Yeah. My final thoughts. You may be a peasant now, but you don't have to die one, right? Let that live with you. All right, guys. Bill, let them know where they can find you. Usually,
You were going to talk about the equity.
no. We're gonna do the giveaway after the episode. The question on
Equity.
They said they have $135,000 in equity, Richmond, Texas. They want to know if they can use the equity to buy another house, which we kind of did explain, but if you want to
yeah.
go over it again.
So if you have that equity, right, Bill, how would they extract that equity from their house to use for another purchase?
So typically you would do what's called a HELOC, a home equity line of credit, and you can get to a certain loan to value in your house. And it just depends on the credit union or bank or wherever that you go to. And then you can use those funds for the down payment on the next house.
Yep.
So if it's an investment property, it's going to be a little bit more down payment.
Sure, but think about this. So they have $135,000 in equity, right? They take out $80,000 of it. That's a 20% down payment on a $400,000 house, right? They can instantly rent that out and start generating an income and building more equity off of that.
But who do you call? You're
Well,
a servicer?
My recommendation would be to rent your current home and go buy a new primary residence because you don't need as much money.
There you go. There's also that. There's also that. Use that equity to refinance or even lower your rate. Take that equity and use it to lower your rate even further. Put it back into your mortgage. Decrease that mortgage. That way you can rent it for more money. You have when you have $135,000 in equity, you have a lot you can do.
You have
with
options.
That.
But
You have a
who
lot.
do they call to do that? Just their
Call Bill.
They call me. I mean,
Hey, if
I'll-
you're
I'll
in
walk
Richmond,
through.
Texas, call Bill.
Oh,
Yeah.
call Bill,
Yeah.
and then he'll set you up.
Yeah.
There you go.
Another question said, is this info the same for condos?
Correct. The difference is that with condos, it's going to be harder to rent because condos typically have a higher HOA because you have so many things in the facilities of the condo. You have gated, you have gyms, you have this, you have that you pay for, right? So condo HOAs usually come with a higher assessment, makes them a little bit more challenging to rent, but I have plenty of investors that buy up condos and rent them out. It just creates some different challenges.
There's
My own
also
personal opinion. I'm not a big believer in condos. That's
Yeah,
just
we
my
can agree
opinion.
there. We can agree there.
I did find out that some FHA loans, if you're in a condo unit, they won't do it.
Yeah, a condo, you guys, government loans can only take up certain amount of a condo HOA. So once the condo reaches its maximum FHA threshold, I've actually lost some deals because of this. Once they reach their maximum FHA threshold, that's it. You're on pause until one of those loans either leaves or gets sold or something like that, right? You got any other questions, Austin?
No, but we have Joseph Martinez who said, Bill helped me with my HELOC.
Hey, good stuff on you, Joe.
Oh, we do have a question. It says, if a new build's lender is offering seller credits for covering closing and buying down rates, is that more advantageous than using a third-party lender?
There's pros and cons. New builds are by often, I mean 100% of the time, are going to charge you more for every single thing on the loan. They're going to charge you the transfer tax, which is usually going to be a couple $1,000s. They're going to charge you higher origination fees. I've compared loan lists from Bill per se, and I've compared them to new builds, and the new build is more expensive on every single section of the loan. But if a new build is offering you an incentive that is so dramatic that it makes up for that difference, yes, it can be more affordable. So for instance, if the new build's offering something crazy, like let's say like a 4.5 interest rate where it's saving you $60,000, $70,000, then yeah, it's hard for anybody to compete with that. That's a lot of money. But prototypically, new build lenders are more expensive than a mortgage lender that you find locally.
And I would piggyback on that and say you're probably better off going with the builder mortgage company, even though it is more expensive.
We're always going to be honest with you guys here. I always will compare the new build lender with Bill. We do this. We've done this 4 or 5 times this year. If we can save you more money with Bill, we'll go there. But I'm not going to force you. If you're not going to save more money, we're not going to make you spend more money just to use Bill. Go what's the golden rule of real estate. Do what's financially best for you. That's it. Whatever's best is whatever's financially best for you and your family.
And
right?
you guys will feel
100%.
it too. You'll feel it if the person's pushing you.
Yeah.
And Bill's very like, if it makes sense, Robert, do it. If it doesn't, don't do it. But if you get somebody who like pushes their opinion on you, you gotta chill.
Yeah, doing this 32 years and seeing so many different closing statements, I can tell you, can I beat it or can I not beat it? And 9 times out of 10, at least in the builder world, I can't beat it.
Yeah. All right, guys. For anybody who is still in the live, we have come to the end of our real estate chat. What we are going to do now is we are going to give away Amazon gift cards, 2 of them, to anybody who is still in the live chat. So
exciting.
if you're watching this later on YouTube, this is the end of the class. If you want to contact me, you can find me, Brandon from Vegas, anywhere on the internet. If you have questions, leave them in the comment below. We have a real estate form in the description. You can reach us. Bill, let them know how to reach you, because I've already had people on TikTok saying, how do I reach Bill?
BillGaylord.com.
BillGaylord.com. It's easy to find. Fill out a form. Him and his team will get back to you. They'll hop on a Zoom with you. They'll get everything going for you guys. Easy peasy. Rob, tell them where to find you. Tell them where they can connect with you.
Robert Condell. That's it. Condol.
Robert Condell. All right, guys. Thank you. And as always, come and be my neighbor. And let's give away some gift cards to the people in the live chat.